Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Tuesday, March 31st, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. We're also going to take off the free trial segment here. And so if ever you have any questions, of course, don't hesitate. Concerning the news today, the news are, I would say, there have been several events that have led this morning's decline on the markets. The first thing is the rumor that China might adopt a quantitative easing policies to stimulate the economy. This rumor was false. Second thing is the fact that investors are still concerned about the earnings season that's going to come for the first quarter, especially with the strength of the US dollar. Third thing, Greece, the EU, and the IMF have not been able to reach any deal, and this is again bringing some fear into the market. So overall, folks, we have markets that this yesterday rebound that was strong is totally fading away. We're having markets that are now stuck within this clear neutral range. Well, we should consider this as a neutral range. And if we take a look at the situation on the Dow, and even on the SPY, and even also on the TSX, the situation remains neutral. So on MarketGurus.tv, what we have done since opening, we have recommended to limit yourself to purely day trading. Forget swing trading. It's all about, forget swing trading. It's all about day trading today. I'm going to show you the list of some stocks that have been active throughout the day and later during the show. But before, let's take a look at some news that we have. We have some news, for instance, concerning Tesla, where Deng Deng released their earnings. They did good. So Deng Deng seemed to be active at opening. But when a stock is moving on earnings, usually that stock is not as volatile. It tends to surge, and after that stays flat. So Deng Deng didn't do much. Also, it's reaching a resistance, so it's kind of too late to get in. Tesla Motors, they actually say that they increased their sales in China. Charter Communication, they will buy Bright House Network. Montpellier, they're being bought by Endurance Specialty Holding. So this is the company that's buying Montpellier. This is why this company is going down. They're paying $1.83 billion. Johnson Controls, they will sell their divisions to CBRE Group for $1.5 billion. And Valco Energy, they say that their well in Angola, well, in terms of the quality of the well, it was judged to be not enough quality, so they will have to forget that well. And when we're talking about a well that's being forgotten, well, of course, the company is going to take a hit because it's going to impact production, lower revenues. So investors are punishing the company. The company is clearly getting out of an important downward corridor. It will be a clear short opportunity, but definitely with the stock that's losing 21%, I think it's more likely that we might have a rebound. Let's say we have a rebound to retest $3 and go down again. That might be a short opportunity. But two things that I don't like with that stock is, first of all, it's a stock that's being traded below $3. Usually, we like to short a stock that at least $5 because the margin requirements are less. And a stock that's losing 21% today, it's not worth to short simply because it's highly probable that we might have a rebound in the next few days. On the Canadian side, though, what we have Amaya Gaming that released their earnings. Same thing as Dang. They surged at opening, but they lost all their upward momentum. So we're back to basics. Back to the same point that we were yesterday on Amaya Gaming. They did good. They beat estimates. Cloud Resources also released their earnings in line with estimates. Luna Gold made a loss. Corridor Resources as well. In Orbit today, what they announced is that they will do a private placement. They found the buyer. The buyer has committed to buy $8.5 million and also has the option to buy $6.5 million more. This is why Orbit is going down today, testing its support. The good news that they were able to find that money, though, but they still have to see how it's going to dilute shareholders, and this is why the stock is being impacted negatively today at opening. And the other news is about Tech Resources. They say that the rumor that they were going to merge with Antofagasta yesterday, this is why the stock surged. Well, this rumor is totally false, and this is why we recommended on MarketGurus.tv to not be caught up by this short-term rally that we had among copper stocks on that rumor. Let's continue here with some news. We have Goldquest Mining that's pursuing its decline. They released some results, asset results from their project in Dominican Republic. Eldorado Gold, they're being accused of escaping taxes, of not paying their fair share of taxes. What they say is that they made some strategy where they had some divisions in, what do you call this country? Netherlands. And actually those divisions were the ones who were collecting the revenue, so they were paying not their fair share of taxes. That's concerning Greece, and we know the Greek government has not allowed Eldorado Gold to move forward with their plant. They have to resubmit the permitting to redo the permitting process again. Those charges, of course, are not helping Eldorado Gold in any case with their project in Greece. So this is why the stock is right now at a clear critical situation, testing its support. Is the biggest foreign investor in Greece. Now, to continue here, we had the GDP and the Canadian side. It's slightly better than estimates, minus 0.1% compared to estimates of minus 0.2%. But so far, nothing really major there on the Canadian side. Now, concerning some questions, let's take a look at some questions that we had yesterday. We had some questions on GIL. Okay, so Gildan, there was a share consolidation. I think it was 241, right, for Gildan? Yep. Yeah, okay. So Gildan, so I did it on the Market Vision software. Now Gildan, what you think for a buy? Well, Gildan is neutral. If you want to buy Gildan within this sideways formation, okay, I don't mind, right? It's a stock that's performing so well. As long as your exit point is at 36, for me it's okay, but getting in within the sideways formation, are you willing to stay patient and within the sideways formation for the next 2-3 months? That might be something you might be willing to do, but if you're getting on Gildan, 36 would be the point where you should exit that positions on Gildan Activewear. Right now the stock is neutral, so you're just buying the stock as long as it remains within its neutral formation. Now, Martin has a question here on INP.V. Okay. You bought on the 25th. Wow. On the breakout. Great job. Great job. At 294. Took some profit at 324. Perfect. Where do you see the support for the remaining? Well, the support is still there at 260, right? However, now you are trend trading the stock. So you should continue to hold on to that stock as long as it maintains its upward trend. For me, as long as the stock doesn't go below $3, there's no reason to get rid of it. You hold on to that current positions. Because the support for me, it's still at 260. Right now, the stock is pursuing its rally. You took it at the top of this upward corridor. The stock might form right now the beginning of a stabilization phase. But for me, it's a nice trade you did. You took some profit, which is a great job. The stock is maintaining its short-term upward trend, and as long as it doesn't reverse it, it's still a hold for INP on Venture. Great job there, Martin. Now, Danny has a question here on IMO. Now, IMO, good time to buy IMO. Not a good time to buy IMO. What's the next good time to buy IMO? Well, if you take a look at Danny's questions here, it's going to be higher than 5178. The good thing, Danny, with IMO is that several stocks, just like IMO, and also several stocks in the energy sector remain neutral. Look at the sector here. So the sector, the fact that it remains neutral, it's interesting. There's a lot of stocks that should be watched for an eventual breakout. If the sector can go above 222 points, that would be the case. For instance, on marketgurus.tv here, we publish every day a list of the stocks that are near breaking out. So this is the stock here, stocks about to be breakouts or breakdowns. And among that list, most of the stocks that are on the TSX are actually related on the energy sector. So for IMO, it has to be watched. It's not yet a buy, right? But only higher than $52, $51.72, it will be interesting because it will clearly reverse this important downward trend. And the fact that it's stabilizing, it's a good thing because the longer we stay within the sideways formation, the better will be the technical signal that will come out of it, either on the upside or on the downside. As a short, below 50, as a short, as a buy, higher than $52 on the reversal of this downward trend, it will be interesting. But right now, it's only worth to be put on your watch list.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. So let's take a look here at some questions here. So CXC has a questions about TCK.B, Tech Resources. As I said, Tech Resources today is going down because they confirmed that the rumor that they might merge with Antofagasta was false. They said that there's nothing that could explain why we had a surge in their prices. Tech Resources remains neutral. It's not a buy at all. As long as the stock remains stuck between $17 and $20, I'm not buying Tech Resources at all. The stock is volatile. They're dealing with a tough copper price environment. You see it here. The stock went down, and it's also below its 50-day, 100-day moving average, which is a clear bearish signal. And this is why, for me, as long as I do not have a price that's at least higher than the 50-day in orange and the 100-day moving average in black, as long as I do not have a price that's higher than that, I'm not touching a stock like that. I think this neutral range between 20 and $17, it's a point where you should see tech stabilize first And then if it could go above $20, might consider it as a buy. Below $17, it's going to be a short, but only if tech resources could stabilize for 2 or 3 more days. Right now, with the rumor that has been, that they say was a false rumor, well, I think that tech is going to stay there for a while, at least above $17 for the next 2-3 days. That's my opinion on that stock. Ralph George here has a questions on PHM. Can you tell me what you think PHM will do? Well, I don't know what it will do, George. I don't have a crystal ball. The only thing I can say, technically speaking, is that the momentum indicators on that stock are positive, right? We have a stochastics that's confirming an upward momentum. Look, definitely that stock, the histogram is positive, it's in positive territory. Really, I can't say nothing negative about that stock, except that it's reaching the top of an upward corridor. So I don't think that at this price, it's worth to buy it. I think there's more probability that we might have a short-term correction on PHM. And on a stock like that, it's the breakout started on March 30th. This is where we recommended that stock as a breakout on marketgurus.tv. You can have access for free for 10 days. But would I get in today on a stock like that? No. I think those of you who bought it on the breakout on March 30th on marketgurus.tv, today it's in a situation where you should take some profit because the stock is reaching the top of an upward corridor. It has been going up so high, right? So I don't think that you should get in right now. I think you could trend trade that stock, meaning that at this point I expect a correction, right? I expect the stock could just stabilize. If you could buy just the stock at a weakness, let's say come to retest 125 or 135 and go back up again, I'll get into it. So you will be trend trading, which means that you will hold on to that stock as long as it stays within this upward corridor. So you buy it when it reaches the low of the upward corridor, sell it when it reaches that top. So if you had done this for the last few months, it would have definitely paid off on a stock like Patient Home Monitoring. So it's a nice stock. However, at this price, it's not worth buying. I think it's due for a correction on a stock like that because it's reaching the top of an upward corridor. And if you want to buy it, see when the stock can test the low of this upward corridor. So I think around 135, 138 could be the point where we could have a stabilization phase. And if we start to go back up, that will be the point to get in on a stock like that. As for the score, well, the score on a yearly basis, the breakout started a couple of days ago. Right now for the score, well, it's a stock that's pursuing its upward trend. It's a late mover. The thing is, you should avoid getting in on stocks that have been going up for the last 3-4 days, right? Stocks like that usually tend to either not pursue their rally with as much strength, which will not give you enough time to take some profit quickly. And this is why what we prefer to have is to have a stock that's beginning its bullish cycle. So if you told me that you wanted to buy the score on March 25th when the stock broke out of that side of formation, I would have told you no problem. When the stock has been going up for the last 2, 3, 4 days, getting late in the movement right now. Now what you should wait for is to see what's going to be the new stabilization phase before having a breakout. For instance, here we had a stabilization phase, we broke out, performed well. Here performed not as much, but it surged again. Here a sideways formation, a broke out, it performed well. So those are the type of patterns you should look for on a stock like this score. Today, I don't think it's an appropriate timing to get into a stock like that. Now, as for the day trade of the day, folks, there have been many. We have RADA. That has been also really active. 2-3 entry points on RADA. Actually, the next entry point is going to be at 314 for RADA, so it has been definitely interesting. But for our day trade of the day, it's that stock here on the NASDAQ. It's also an opportunity for swing traders. So this is one of the reasons why we recommended that stock. It's an exception. It's in the healthcare sector, one of the strongest sector on the NASDAQ. One entry point here, one there, one there. The next entry point now becomes on the reversal of this downward trend, higher than 373. It's going to be interesting. We have an oversold situation. However, the stochastics is not yet reversing this downward trend. So you need to be a little bit more patient to see the confirmation of this and see the stock breaking 373 before confirming an entry point on a stock like that. So that's it, folks. I'm going to take the other questions tomorrow. Overall, for swing trading, it's a no-go. For day trading, some opportunities are standing out here and there. RADA on NASDAQ or IGL, for instance. The rebound of yesterday is as faded, as I said, for the following reasons. False rumor concerning China, because nothing says that they're going to stimulate the economy. Worries about the earnings, and the fact that the Greek government has not been able to reach any agreement with its creditors. Those are some factors that are weighing in negatively on the markets, and this is why today they're having a correction. However, on this correction, markets remain neutral, and this is why for swing trading, it's better to remain patient, stay on the sideline, and focus on day trading instead of swing trading. So see you tomorrow, and I wish you all a good trading.